We've called this year's edition of Aussie Mine Rise and Shine to reflect the return to very strong confidence in the mid-tier Australian mining sector. Indeed, the mid-tiers have grown in market cap by 1/3 over the course of the year to now be worth $64 billion in total, which takes it back to pre-GFC levels. This has been driven by very strong commodity prices, but also stronger confidence in the future in general. Indeed, over the course of the last 2 years, the mid-tiers have had equity raisings totalling 10% of their total value of market capitalisation. So they move into the future with very strong balance sheets and a much more positive outlook to the future compared to what was there 12 months ago. The revenue line for the mid-tier for the year was up by 32%. This was off the back of very strong demand from Asia, driving up commodity prices, particularly in copper, gold and platinum. In addition, there was significant production growth, with a number of mines being opened up both within Australia and offshore. China continues to play a significant role in the Australian mining industry. On the deals front, Chinese investors continue to target Australian resource projects. However, the stronger Australian dollar has made it increasingly expensive for them to engage in M&A activity in Australia. As resources become scarcer, we expect to see more companies looking to non-traditional mining locations. Two good examples of those are West Africa and Mongolia. China have recognised the riches available in Africa and are leading the pack in terms of investment there. We expect to see a lot more Australian miners following their lead in the coming period. However, it needs to be recognised that these projects require significant investment, particularly in infrastructure. I see three significant challenges for the industry going forward. Firstly, the uncertainty surrounding the government's proposed minerals resource rent tax. Secondly, the strengthening Australian dollar has meant that we're not seeing the full benefit of the increases in commodity prices in US dollar terms. Thirdly, the increase in cash on the balance sheet of the mid-tier miners gives rise to some interesting challenges. On the one hand, it creates great opportunity for looking at additional M&A activity, but on the other hand, stakeholders will be watching very carefully to make sure good decisions are made around how this cash is utilised. This year's Aussie Mines suggests that we now have the strong foundations for a return to form for the Australian mid-tier mining industry. Stronger balance sheets, better commodity prices and a return to favour in the equity markets all bode well for the industry. Probably the only counterbalance to this is the strong Aussie dollar and the impact that that will have on future profitability. Cash balances have climbed to a remarkable 19% of total assets during 2010, resulting in excess cash of over $7 billion. So the future looks very exciting for the Australian mid-tier. It's going to be interesting to watch how they utilise these significant cash balances that they have recently accumulated. Expect to see a lot more M&A activity and further mine development in the period ahead. I hope you enjoy this year's edition of Aussie Mine.